In 1987, the movie Wall Street premiered. It's a great movie, by the way. If you haven't seen it, you should really check it out. In this film, the lead character, Bud Fox, is an ambitious stockbroker, laser focused on financial success. Fox sees a mentor and hero in Gordon Gekko, who, by all appearances, seems to be a successful corporate raider. In a bid to have Gekko accept him, Fox uses information in the form of insider trading to open the doors to Gekko's inner circle. Fox's own greed leads him to make worse and worse decisions that eventually affect the livelihood of his own family. While this is a work of fiction, that doesn't mean it can't happen in real life. In 2008, as a result of the housing crisis and the following Great Recession, people saw their portfolios lose 30% or more of their values. And older workers saw their 401k plans and IRAs drop to levels that threatened their retirement plans. This was the second worst drop in the stock market since the Great Depression. This was an economic period that lasted 12 years before there was enough of an increase in the market to show growth in the value above the levels seen at the time of the downturn. This means it took over a decade before there was a clear sign of economic recovery. Instead of acting rationally during severe bear markets, many people tend to overreact and make matters worse. However, while many people panicked or were forced to sell their assets at low prices, a small group of patient, methodical investors saw the stock market collapse as an opportunity. This is a high risk, high reward strategy of investing in a crisis that, if successful, can result in the opportunist significantly enriching themselves at the expense and harm of many others. What if you never lived poor and had to struggle? Would you feel guilty if your decisions affected others? Would you be willing to manipulate the market to increase your wealth, regardless of the consequences? Would you risk crashing the market for your own personal gain? Elon Musk has been known to use his ownership of Twitter to directly affect the costs of stock and cryptocurrencies. He makes a post that encourages buy-in, then sells his shares at a huge profit, which then tanks the value and can cost a significant portion of other investors to lose their investment value. The same is true of Trump, who began his term with a pump and dump scheme using his own volatile meme-related cryptocurrency. In all cases, the people on top stay on top because they know exactly when to buy in and when to sell out due to their insider information. Musk gets a pass because he's the wealthiest man in the world, at the time of filming at least, while Trump actively manipulates an unregulated investment offer. On March 4th, 2025, Trump pushed through his tariffs on Canada, Mexico, and China on nearly all imports. On March 5th, he delayed tariffs related to automobiles until April 2nd. By March 6th, Trump delayed tariffs on Mexican goods, then later followed that up with a delay for Canadian goods as well. In that time, the stock market saw a $3.5 trillion loss and the Dow tumbling almost 700 points. This was due to a heightened uncertainty around Trump's newest tariff policies, which, alongside emerging signs of a softening economy, have pushed bank stocks lower this week. Although Trump's latest tariffs have instigated a broader market sell-off, bank stocks have been especially pummeled. Further complicating things is the impending and pointless trade war instigated by Trump against the United States trade partners. Countries like Canada are now refusing to sell U.S. goods. In some cases, they are returning items that are sold on consignment to the U.S. suppliers. Brown-Forman, the makers of Jack Daniels, was affected by this, as was the community local to their Tennessee manufacturing plant, through workforce reduction and the supporting farmers. Chris Swanger, president and CEO of the Distilled Spirits Council of the United States, has stated that tariffs impact more than consumers. In one quote, "Our agricultural partners, it all starts from grain to glass, to distillers, to bars and restaurants and bartenders." He added, "But of course, let's not forget the consumers, the Canadian consumers that love Tennessee whiskey." There's nothing measurably positive that can come from this for most people who aren't investing in the crisis. So, which is it? An act of stupidity by someone who doesn't understand global economics? Or just another rich guy and his cronies manipulating the market for personal financial gain? Please like and subscribe for more content like this. Ring the bell for updates.